Good day, ladies and gentlemen. So today I want to teach you what a breakup block is. Okay, so if you trade smart money concept, you must have heard the term breakup block, but you might not know what it means. So I want to break that down today. Okay, so a ICT breakup block is simply an order block that has been mitigated or disrespected. Okay, so let's say you have an uptrend like this, for example. Definitely you can find an order block around this region. And for those that don't know what an order block is, an order block is simply the last bullish candle before a bearish impulsive move, or the last bearish candle before a bullish impulsive move. Okay, so you can find an order block around this region. Let's say this is your order block right here. Now, if price comes to this order block, the idea of an order block is that once price comes back there, you are going to have a buy trade from here, since price moved upwards from that region before. So we expect that if price comes back to that order block, you are going to have a buy trade. Now, is the inverse, the opposite of that is what makes that order block become a breakup block. So you have price moving upwards like this, then you spot your order block right here. Let's say it's around this region. Price comes back and disrespects the order block like this. Do you see that? So what we are expecting now, this order block is now called a breaker block. So what you have here is no longer an order block, it is now a breaker block. So we are expecting price to pull back to that breaker block and give us a sell trade. So it's more like the inverse is what we now expect. And since we expect the inverse, we no longer have an order block. Instead, we have a breaker block. That's just the idea. If you understand the concept of order block, breaker block will be very easy for you to understand. Breaker block is an order block that has been disrespected. Let me give you an idea of how it's going to look in a bearish scenario. So you're having lower highs and lower lows like this. Then you spot your order block right here, for example. Let's say this is an order block right here. Markets comes back and disrespects that order block like this, going past it as if it does not exist. Okay, so we are expecting the price to come back to that area and give us a buy trade. So now this stuff you called an order block is now a breaker block. Once the price action has gone past or disrespected the order block, it is automatically a breaker block. So we're expecting price to pull back to it and give you movements in the opposite direction. All right, so I have about 2 examples for you on the charts. Let's go and see. I have 2 examples on the charts very fast. They're already marked out, so I won't take your time trying to search for them. I think it's on the 1st of April. Where are they? Let's see. Should be somewhere here. Okay. Alright, so these are the 2 examples I have for you. Let me zoom in. Let me take the rectangle out. Delete. Okay. Take this. So look at what happened right here. You had price move this way, then price pushed down in this manner, giving us an order block up there. So I'll mark out my order block with horizontal lines. You can see this is the last bullish candle. Look at this small candle here. That's the last bullish candle before bearish impulsive move. So the boundary of that candle gives you your order block. For those that don't know what an order block is, I've just explained that right now. That's the last bullish candle before the bearish impulsive move. So the boundary of that candle gives me my order block. Normally price is supposed to sell when it gets back to this order block. I'm supposed to have a sell trade, but in case it does not happen and price blasts through the order block, automatically what I have there is a breaker block. So I'll take advantage of that. I'll wait for price to come back there, then I'll take a buy trade. So things are flipped. It's now the inverse that is taking place. So that's the breaker block now. So let's see when price came back there. You can see what happened. Price touched back on that region around here and gave us a buy trade. Can you see? You would have caught a buy trade right there. So that's the first example. Let's see the example right here. Let me take this rectangle stuff out. Where is the delete button? Okay, so you have this right here. Look at this. This is an order block right here because price pushed up. So this is the last bearish candle before price pushed up. I'm talking about this. That's the last bearish candle before price moved in the upwards direction. Okay, so I'm expecting that when price comes back there to give me a buy trade. So price pushed up this way. I'm expecting that price will come back to this order block and give me a buy trade. But instead, price did what? Price blasted through it like this, as if it does not exist. Automatically, it is now my breakup block. My order block is now my breakup block because price disrespected it. Okay, please, if you are getting any value, please subscribe. That's the only way you encourage me to give you these forex knowledge for free. Okay, so what I'm now expecting is for price to come back to that level and give me a sell trade because it's now a breakup block. So let's see when price returns to the level. Okay, price almost tapped into it right here, just touched the edge and gave us a sell trade. But in case you missed that, I think it filled it at some point. Okay, so it got filled at this point. The breakup block got filled at this point and price gave us a wonderful sell trade. Alright, so basically that's how breakup blocks work, and it's a smart money concept. Okay, so if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. If you have any question, you can drop them in my comment section. I'll do my best to actually respond to them. Alright, thanks for watching. I'll see you in the next video.